Good morning, traders. Today is Friday, October 7th. My name is Charles, and this is the Pirate Traders live stream where we talk about the ES and the NQ and how they're affected by the two-way auction process. Sorry, I'm running a bit late this morning, so I'm going to have to do my analysis in real time here and kind of figure out what's happening in front of you. Okay, so the spike down is clearly because of the non-farm payrolls. Those numbers came out better than expected, so of course the market crashed. We can consider this a breakout of what was, a very, very short-term balance in here. Connected to that massive magnet we had from the node of death yesterday, which just would not let us go. So breaking away from that is, of course, bearish because it is a breakout of that balance. We're also now re-entering the previous balance area where we have been doing battle for the last week and a half or so. So re-entering that balance area is the market sending us a message that we're not ready to break out yet. And if we don't have the buyers here for continuation higher, we are likely to need to pull back in order to bring in more buyers. So it is very bearish to pull back down inside of the previous balance area. There is a chance all they wanted to do was fill the gap here. So if we open this morning and we turn around, so we've got a gap inside a gap now. This is always really confusing to explain to people. We've got a gap inside of a gap. So first order of business this morning is filling the gap from this morning, which is the gap down. Can they fill that? Okay. If they can get to yesterday's low and then they find resistance there, or they can't get to yesterday's low, they find resistance before getting there, that is a gap and go, which is very bearish. Okay. But then we have now just officially filled this old gap. So if they can get back up to the base of yesterday's range, the range from 2 days ago, and they don't find resistance there, they're able to get back through, that is very bullish, that it was just a gap fill. So this is actually a really complex market. First order of business, can they fill the gap left behind from yesterday? That is a very, very large gap, which increases the odds they will not be able to fill. So you got the breakout of balance, which is bearish. You got the gap and go, which is bearish. And you got the re-entry into a previous balance area, all of which is bearish. I am now officially bearish. Too many signals saying this market does not have the buyer. So the next target to the downside is testing the overnight low. Do we find support there and pull back up? Or do we get continuation lower? All right, so once again, we're looking to test the overnight low right here at 3,700. Do we get support there? Come back up and then test this node just above us now to see does that become resistance. So that is staying below 37.10, the halfback. At this point, if we pass back through the opening price again, we can consider it an attempt to go fill the gap. So if they want a gap and go, they should get the sellers here. We got 173 people hanging out, only 29 likes. That means 140 of you hate me. You think the worst of me. You're judging me. Joe Park made it 30. Thanks, bro. All right, we're getting resistance below the opening price. That is bearish. Once again, looking to test that overnight low. B-Bands. Thank you, B-Bands. I was just kidding. I'm not really upset about it. But seriously, there are over 100 of you, 100 people here who want me to give them free advice about what's happening in the most complex system on Earth in real time. And they won't even push one little thumbs up button. There's information in that. Apology accepted, Kotik, but just this once. You better never forget again. Never ever. Mark's short the thumbs up. He's thumbs down. He's long the thumbs down. Mr. Gee, you laughed at me for calling the pullback on the 29th 3 days early. Well, hey, you laughed your way to the bank. Enjoy the money. Cotique? Oh man, let's not get into that. Bring it up again in the brigade. Uh, that's not a first hour conversation. But I'm sorry to hear that. And you'll be fine. DJ, thanks for the sub. Welcome. Did I trade through it? Yeah. I traded and live streamed through it. How many people are in the brigade? Less than a Boy Scout, more than a Boy Scout troop, less than an army. That's a brigade. All right, so those overnight traders are taking profits here. Everyone who went short on the news. So if they can get back up through the opening price, 37.14, I will be back to neutral, looking for an attempt to fill the gap. But as long as they stay below it, bearish. Okay, there they go, back to neutral. Looking for an attempt to fill the gap above. Obviously, it's a very, very big gap, so the odds of filling it are much less. But it looks like the buyers at least want to try. So now the question is, does the previous resistance become support? Does this node right around halfback now become support for the market to try to poke higher? All right, no support in that node. All right, there's the break of the overnight low. Bearish once again as a cap and go. So now, does half-backed act as resistance and actually hold the market down? Once again, this is all very bearish. A gap and go is bearish. A break back down into previous balance increases the odds of a rotation to the opposite end of balance. Multiple weak references in need of repair. On and on and on we can go. This is very bearish. So we got low volume nodes here in need of backfilling, looking for resistance. Remember that the momentum from a gap and go often won't give you many pullbacks as a chance to get in. Once it takes off, it just goes until it's done, until the momentum is gone. Okay, building volume, pushing lower, building volume, setting up to push lower. Could be the beginning of a trend. Fighter pilot potential to eventually the other end of balance of extremely high potential. I would say there's a very real chance that's where we're going today. Just can't say it with certainty until we test some resistance. But we can't test some resistance until we break the momentum. So it's hard to be sure, but that is the highest probability. Well, if the theory is the market moves to the liquidity, there's like none above. But there's a lot down there at those weak references. Chilling with Dylan. I know that balance areas are kind of subjective. I've got mine at 39.95. How about you? I assume you mean 35.95. Yeah, 35.95. I actually feel like I need to redraw it now. So I would call that 36.26 as the balance area low. Obviously nowhere near as far down as you would. But you know what else you could look at if you really wanted to was that weak low that this whole move was built on. I mean, if we get to the balance area low and we don't bounce and revert back up there, it's a very high probability we got to repair that low. But I would say if you're looking for a target sort of to the opposite end, 36.26. You went with 35.95. 35.95. Yeah, so the reason you don't want to use 35.95 is because that only worked as a level one time, right? We came down here one time, we dipped below it, and then we reversed and headed back up. So that could be a larger balance area that's forming. But as far as re-entering the previous balance area, that's this balance in here. And this was just the look below and fail. But could we, on a larger time frame, be building balance? Sure. And then that would be a good balance area low. But we would have to test it again. We'd have to look below there and fail again. Like come down, repair the week low, and then turn right back around. Then that would be an important level. Okay, a period low is now considered weak because it is all asks and it is at a previous reference. Increasing the odds, we're going to continue lower. Jeremy Jones, we are in a strange time. Jobs keep getting added. Pappy wants to kill him. Economy is holding its own. Pappy wants it to die. Yeah, because the problem is Pappy's worried about stagflation, right? You can have an economy where jobs are all right, but you have terrible inflation, and then it becomes a self-perpetuating cycle where companies have to pay their employees more and more and more money. And then those employees have more and more money to spend on stuff. So then stuff gets more and more expensive. So then, you get this inflation just keeps going and going and going. So they gotta break the economy to break the inflation. Then we can get back to good times. Sometimes the market has to break before it can rally. All right, so we repaired the first week reference, and we didn't get any kind of bounce, so that increases the odds. The market wants to go lower. The next target is the week reference at 36.7850. So the same thing will be true of this week reference. Once we repair it, okay, we need to get one more tick lower. Once we repair it, either we find support and turn around and head back up, or the target becomes the next week reference. I'd be looking for support right here at around 36.74 and then down here at 36.69. Okay, that week reference is repaired. Is that enough to bring in the buyers? Very unusual little volume cliff right there. Another weak low. All asks. All bids, I'm sorry. Okay, poor low increases the odds. We're going to get a push away into resistance and then come back looking for continuation lower. Looking for resistance around 36.88 to 36.90 area to come back down and repair that poor low. If they do not find resistance here, the overnight low is the target for resistance. Kassane, is the 37.48, 37.10 gap filled now? We opened at 37.18 and moved lower. Yeah. So if you open below a level, that's the same as repairing it. So like, for example, there was like a weak low we had left behind yesterday, but we opened below it today. Opening below it automatically repaired it. Same thing with an old gap. So if like the market is trending higher and then it has a gap that it leaves behind one day, and then the next day you open below that gap is filled. But of course, then you have a new gap back up to the previous day's low, which is what happened today. We filled the old gap, but created a new one, which is giving us obviously gap and go momentum. Okay, that's the repair of the poor low. So once again, same as before, they repaired that second week reference, tried to bounce, didn't get a bounce. That increases the odds. They need to head down and repair the next week reference. Down at 36.60. We'll see if this node around 36.69 can hold. But that very small little bounce from the poor low is a sign it won't. And that the momentum is not over. Scooball, I have nightmares about the poor low after yesterday on NQ. Well, now you know. You know what was happening. It was so weird when it was happening yesterday. Look at that. They just kept buying. Well, of course, how weak were those freaking hands? The second they woke up this morning and saw how much money they'd lost, they just got punched in the face. If I could offer any piece of advice to traders, don't buy poor lows. Sell the resistance to go back and repair them. Man, I have to say, keeping the ticks below negative 1,000, this is heavy selling. NQ balance area low. Whoops. What did I just do? Yeah, I'd call the balance area low on the Q somewhere around 11,160, somewhere in that general vicinity. So yeah, we're headed down there. It's also worth noting that low for the move, that overnight low, also weak. So if we can't find support in those 1160s, it starts to look like this market wants to make new lows. Not today, obviously, but in the near future. Jeremy, are you guys saying this is bearish? I guess I could kind of see it. Yeah, the daily probably looks very scary right now. Ugh, yeah. Who wants to buy that? Did they reject perfectly off the 20 daily simple moving average? And I didn't even notice? That's bearish too. That's a swing trader short entry right there. Yesterday's high. And those are the traders that would take it to the opposite end of balance. They wouldn't be looking to profit until they were down there. Son of a gun. Michael, are the buyers kicking in now or just nibbling? Yeah, I would describe this as profit taking, not new buying. They could be. I mean, it is a support level for them to buy. But they'd have to get those ticks above the zero line. Or I guess they just did. I guess now they have to keep those ticks above the zero line. Nap. So SMA just came into play today. Yesterday was around 22, I think. How does that play? Yesterday was around 22. Yeah, I mean that was the resistance. Oh, it didn't just become a swing high today. That's where the moving average would have been yesterday. I just didn't have it. I wasn't looking at the daily candles, but it would have been there when we were there. When the candle was pushing up into it, whoops, it would have been there at the time, and we would have been poking up into it, and then we failed. Nap, this area is interesting. We gapped up, gapped down, gapped up. Yeah, it's just the way it is, man. We're balancing. If you just zoom out and look at what the market is doing, bigger picture, it's just going nowhere, right? It had this big, massive move to the downside. It spent, a week kind of trying to figure out if it wants to go lower. Couldn't do it. Tried to go higher. Spent 3 days trying to figure out if it could go higher. Couldn't do it. Came back down. It's just uncertainty. It's really annoying, but it is what it is. I wouldn't be too obsessed with the fact that it happened to happen at the exact same levels and stuff. It's also worth noting that that's a low volume node. Zoomed out here. So the market often jumps straight from one to the next and then jumps straight back down, which is why it did that. Jumped up, jumped right back down. All right, so they made it through some, that little resistance down there at 79. So it looks like they're heading up towards this node around 36.88, looking for resistance there. Remember, the fact that those ticks are below the zero line is telling us that more of this activity, more of this buying that's happening here is shorts covering. It's not new money buyers who are trying to take the market higher. It's people who were already in shorts who are starting to lose faith that it's going to keep going lower, so they're taking profits down here. But unless we can get the ticks above the zero line, there are more sellers than buyers. And it's only a matter of time until we run out of previous sellers who want to take profits and those new sellers take control once again. So keep an eye on the resistance and the ticks. Does the resistance hold? Do the ticks keep getting smacked down every time they try to go above the zero line? Minster, yeah, if you're not a day trader, you're in the wrong room, my friend. This is for day traders. We look at the market completely differently than you do, and we make money off the market completely differently than you do. I do think it's fun to be out of trades by 4 p.m. That's one of my rules. And I think it's fun to make money for just following my rules. Chilling with Dylan. Bear market rallies are tough. So many head fakes. Yeah, and it's also just, I think, the nature of what the market is nowadays. I mean, we've talked about this at exhaustion. It's like the amount of volatility is not going away. It's just the way the market is, the size of the ranges. And the size of the ranges add to the emotion. Adding to the emotion makes it more complicated. It's just like, what can you do? It's the nature of the market. Okay, so do the ticks get slapped down here? Sid, do you mainly trade futures or options on the futures? Futures for me. But there's a lot of people in this room who trade the options. Chilling with Dylan. There you go, man. It's like you can just see it if you look at the, oh man, no resistance there. Okay. Buyers are stepping in. All right, next potential resistance is half back, and then the overnight low. I really don't think we're going to get back above the overnight low, back above 3,700. I have a feeling we're going to get smacked right back down. But if we do, I would be back to neutral, as a gap and go should get continuation of the momentum. But yeah, I mean, you can literally just look at the candlesticks. Like, just zoom all the way out on a chart like this, where every candlestick represents a day. Look at what days used to look like, you know? Now look at what they look like. It's just changed. The higher you move up in the chart, the more the volatility you get. It's the same thing with Bitcoin. You know, this was a giant, huge move. Now this is a giant, huge move. You know what I mean? Like, it's the further you move up the axis, man, the larger that range becomes. And the larger that range becomes, the more you win and lose with every trade you enter. And so then the more heightened your emotions are. N rotational N. Silly Billy. No, of course not. We have a gap and go. We have value lower. We have the market back inside a previous balance area. Way too early to think about rotation. Chirp says last year was pretty unnatural and unpredictable in terms of monetary policy, stimulus, etc. Really hard to tell where it will all settle out. I hate to be the bearer of bad news. I don't think it's ever going to change. I think it's a new normal. I think from now on, just society has continued to progress faster and faster and faster over time, right? If you look at the way people lived in the year 1000 and the way they lived in the year 2000, it was almost exactly the same. You know what I mean? Like the difference is so much. The difference between, 1870 and, 1970 is a massive, huge difference. The difference between 1870 and 1770 is like nothing. It's like basically the same thing. Maybe they had the beginning of the Industrial Revolution, but like life was just pretty boring and things were always the same. And slowly but surely they progressed and they changed. And like a snowball, building up steam. The more snow it develops, the heavier it becomes, the faster it rolls, the more snow it develops. So I just think life is going to continue to move faster and faster. And the rate of change will be exponential. So it used to be we'd have a big crazy thing happening once every couple years. I think it's going to be the new norm now. There's always going to be COVID or a war somewhere or something. And the markets are always going to be up and down and all over the place. And all we can do is trade it minute by minute, see what's happening. How can I make money off of what's happening right now? Another way to describe it is like the adoption curve of society is getting faster and faster and faster, Think about new technologies. When you invented the telephone, still to this day, there are huge chunks of the world that don't have the regular telephone. But now they have cell phones. When that newer technology came out, it spread even faster. It took Facebook a decade to get to 1 billion users. It took TikTok like 3 months. I just think things are speeding up and it's not going to change. It's just going to keep going faster and faster and faster. Design up 8-track tapes coming to some places soon. Yeah, but that's not an adoption curve play. That's a nostalgia play. And records, if you look at the charts, record sales are still going up now. They've been going up for the last decade. And it is still a growth sector for the music industry. But people aren't buying records for the technology. They're buying records because it's cool. So that's not an adoption curve play. Tom, I'm interested to know your perspective on if you think stocks will be higher than they are today 10 years from now. Yes, without a doubt. I can't, speak about any particular company, but will the stock market be up? Yeah, definitely. For the market to not be up 10 years from now, the world would have to stop being the world. You know what I mean? Humans would have to stop waking up in the morning with a desire to accomplish things and buy things and do things. We're like ants. We can't help it. We just want to consume. And as long as we keep consuming, there will be a machine to keep profiting off that consumption. And as long as there's a machine to profit off the consumption, there's a place for speculators to speculate on it. Now, where it gets interesting is when you start talking about what stock market and how much higher, right? Which stock market is going to grow the most over the next 10 years? Is it the American stock market? Or is it going to be China? Is it India? Is it South Korea? There's an interesting question. But will stocks go up? Yes, absolutely. They will go up. All right, geez, I totally got sidetracked and lost track of the fact that I'm supposed to bounce on y'all. Later, Gators. Later, freeloaders. Enjoy your weekend. Have some fun. Drink some beer. It's probably the last of the nice weather, so make the most. And we will see you here again on Monday morning. As far as what I'm looking for here today, I know the momentum has completely died, and that is potentially a sign that the trend is going to come to an end because, that gap and go is really all about momentum. It's about people fear and panic and just more and more people freaking out and the market continuing to go lower. So the fact that we've spent this much time kind of just chilling in here means we might be looking for support. And so the first order of business is, can they get that C period low below the B period low? Okay. If they can get the C period low below 36.71, the market will be trending lower. And then as long as each 30-minute time period, the high of the time period, stays above the previous high, you can expect the market to keep going lower. But if we don't do that, if we do not go down and break that B period low with the C period, and instead it pulls up, I would look for resistance at the overnight low, which is at around 3,700. It's also worth noting that we have a low volume node right there. This is just one of these random little things about the market where if you leave this little node of volume behind, the market really, really wants to come back and do some more business there. But there is almost certainly business waiting to be had there. So I would expect that to act as very strong resistance. So nothing's going to get me out of a bearish perspective, out of a bearish bias, unless we can get back up into that overnight range. If we can get back up in there and find new buyers in there, then I'll get bullish, but to try to fill the gap. But up until that, I think it's either just going to go sideways down here or we're going to start trending lower. And as I said all morning, that previous balance area low, it happens over and over and over again. And every time I say the same thing and every time they don't listen, which is that when the market re-enters a previous balance, the highest probability is it is heading to the opposite end of balance. However, because there's so much support and resistance in here, because we've spent so much time in here, the market will not go in a straight line. It will keep bouncing all day long, trying to convince you it's ready to reverse and go back up. And then out of nowhere, you just find yourself at the opposite end at the end of the day. It's the most frustrating thing on earth, but it happens over and over again. So as long as we're below that overnight low, I remain bearish, and I keep in mind that the highest probability is the opposite end of balance. With that, I bid you farewell. Enjoy your weekend, and we'll see you on Monday. Of course, if you're in the brigade, it's time to ride. Bow, 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 bow. I just turned this into like country. It's time to ride. Bow, 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 bow. Also, if you got nothing going on this weekend, might consider taking that e-course, learning how to read the profile. Just saying. You can pay for it with just a 3-point win at any point after finishing the course. 3 points. I called the gap and go at the overnight low 20 points ago. You could have too, if only you'd taken that e-course. All right, guys, we'll see you on Monday.